Hello and welcome to another discussion hosted by Crypto CFOs. Today we have our discussion on crypto payroll and Web3 accounting best practices with Rise and Cryptoworth. So my name is Taylor Zork. I am the CEO and co-founder of Crypto CFOs. We're an educational platform and network and a community focused on Web3 accounting and finance. And today on our panel, we have the co-founder of Rise, Hugo Finkelstein, and Cryptoworth's director, Richard Pasquin. I'll let each of those guys introduce themselves.
Thank you. Hi, everyone. Thank you for having me. Thank you for moderating this panel here, Taylor. So yeah, I'm Hugo Finkelstein, co-founder and CEO of Rise. And what we do is Web3 enabled payroll and compliance. Essentially, we enable all kinds of organizations, DAOs, protocols, or traditional businesses with all kinds of treasuries, hire and onboard people all around the world, hire them compliantly, and pay them efficiently, basically.
Hello, everyone. My name is Richard. I'm a director at Cryptoworth. Cryptoworth, we are a crypto accounting and reporting software for Web3 companies worldwide. We've been doing this for over 4 years now and coming up to our fifth. So we work with essentially every vertical in Web3 for compliance, tax, and reporting purposes.
Very awesome. So today in this webinar, we're going to cover a wide array of crucial topics, including the challenges faced by crypto native companies, as well as traditional Web2 companies in implementing payroll systems that support digital assets. So we're going to cover the complexities of tax compliance, the advantages of adopting a hybrid payments infrastructure, and the nuances of treasury management specifically designed for payroll needs. So additionally, our two experts are going to discuss the considerations for hiring international contractors versus employees, ensuring security in crypto transactions, and integrating payroll systems with existing accounting frameworks. So we're really going to talk about how each of these aspects fits into the Web3 tech stack, right? We talk about the different software tools and all of that we have in our finance stack. In Web3, a lot of those are going to be similar in how they look, but we have some different nuances that need to be addressed as well. So I kind of want to just start off by giving a little bit of a background on myself and kind of the challenges that I've personally had with this, because I think it sheds some light on this. I am the former CEO of a couple of different crypto startups, and I'm still currently advising some as well. But in my role, when I started back in July of 2020, one of the biggest challenges was finding really solid tools because they weren't really built out yet. There were some that existed for subledgers, but they weren't as robust as we needed them to be when we were working in DeFi, because there were so many new chains that we were working on that the subledgers at that point couldn't keep up with adding all the new chains. So a lot of the times I was stuck doing things in Excel. I know these guys both probably are cringing at the thought of doing all this stuff in Excel. And I would use multi-sender tools, which allows you to send payments to multiple addresses at the same time, but you have to manage all the back end manually, and it can be a mess. So just kind of jumping right into it, can you guys share some of the challenges? I've highlighted some of them, but what are some of the challenges in relating to like payroll and accounting for crypto native companies? Hugo, why don't you start?
Okay. Yeah, and I think it's a challenge that we're facing, that we're solving at Rise, and direct result of speaking with many crypto companies. We saw a fit in the tool that we've built. So essentially today, let's say you're a crypto native company, you have treasury in cryptocurrencies, no matter what kind of currency. The main challenges that operators or founders or managers, whoever's in charge of payroll, face are around how do you process a multitude, of payments at the same time to contractors all around the world. It's very manual in the sense that unless you're using a tool, you're doing things manually. You're gathering wallet addresses from your workers. So you're probably doing things in an Excel sheet with the name, the wallet address, how they want to receive, so which currencies they want to receive. What we're seeing is that you're denominating, amounts and values in dollars. So you have to do a little bit of conversions depending on what kind of currencies you're sending. So there's a lot of manual processes. It's very prone to error. So basically manually time consuming and prone to errors.
Yeah, and I think that just to add on top of that a little bit, when I was managing this stuff in Excel, you don't really have a way to validate other than your own manual process that you've actually gotten the proper documentation that you need in order to pay someone and this person and remain compliant in that as well.
Yeah.
So whether that's a W-9 or something
Yeah.
like that, or having that on file, it's very easy to just send payments out to people, but having a system that helps you consolidate that information and ensure that you've actually done the proper steps that you need to remain compliant with each of these individual people is really crucial as well.
Yeah, absolutely. That's one thing I didn't touch, but on top of doing manual payments and gathering wallets, etc., you want to make sure you're compliant. And that's one of the other challenges that those managers are facing is, especially when you're working in the US, where regulations are harder, more opaque, it's definitely tougher. So, it's hard to find a tool that does everything.
Yeah, and how would you say that the subledgers, Richard, how would you say that the challenges around getting this info into the subledgers as well? Where does that play into this?
So I would say that's actually the biggest challenge in the crypto accounting space is getting that data into a ledger that's comprehensive and readable from a financial accounting standpoint, because all that data from different blockchain explorers needs to be translated in a way where cost basis can be clear, the transfer of assets can be clear, and the problem compounds the more chains a project is on, because that means there's more explorers that they have to work with. That is without a subledger. A subledger is supposed to automate that problem by connecting to many chains. But then another problem is NFT accounting and DeFi. So DeFi transaction events compound the problem in understanding where assets are flowing, how cost basis is transferring into different network swaps. I mean, you name it, LP tokens, staking pools, balances that are not in a wallet, but in a different, like in a DeFi pool, some kind of DeFi pool. Those are still balances that need to be reported. So the crypto subledger is really just solving a major data problem. So that way accountants could actually do accounting of their crypto.
Yeah, and I think, piggybacking on that a little bit, one of the major challenges I've had, again, in trying to, before tools like Cryptoworth existed and before Rise existed, or at least before I was aware of them, one of the biggest challenges is dealing with how each and every blockchain or each and every exchange seems to have a different way of presenting data as well. So if you go to the exports, they all have different ways that they present it, different columns, different names for things. And so aggregating that in a really effective and efficient way is really, really key as well. So nowadays, what are you seeing as far as the current users of your platform? Like, what would you say that it's mostly crypto native companies, or are you seeing interest from companies that are looking to just provide a more efficient or another option for a payment methodology? Which would you say the majority of the existing clientele is, Hugo?
So, the majority of our customers today are Web3 native, crypto native. So, and we have all kinds of organizations. So you have, traditional businesses just with treasuries in crypto that are looking to scale their payments in crypto, or, we actually have a dual payment infrastructure. So we enable companies with treasury in crypto to pay people in fiat. So that's one of the use cases that some of the protocols and DAOs we have on the platform have. They have contributors all around the world that want local currencies, but they only have treasuries in crypto. That's one use case. One that we're seeing that we're super excited about is seeing Web2, like more traditional organizations with treasuries in fiat, wanting to offer that flexibility and dual solution to their workers. Like we've actually, in the past couple of months, we've gotten a couple of deals where it's, let's say, a software agency that has, hundreds of independent contractors all around the world. Some of them are located in countries where, the inflation is pretty bad and they want to hedge against their, local currencies. So they're asking their clients to pay them in stable coins. But those clients don't know how to do that. They don't have it in their treasury, and they don't, know how to deal with all these wallet addresses, transactions. They don't even know what a gas fee is, etc. So super exciting to see that there's more demand and interest from those kinds of organizations.
Yeah, I think that, I have friends here in Costa Rica that have come here from Argentina, for example, and it used to be that people wanted to change their assets immediately, their pesos, into US dollars, and now you're seeing more and more people that want to either get paid directly in Bitcoin, or they want to immediately change their salary that they received into Bitcoin. So I think you're going to see more of that, in especially as we see the money printers continue to go, and we see hyperinflation and large percentages of inflation across the globe as well.
Yeah.
Richard, what are your thoughts on implementing this at scale? Like, what do you see? How do you see the next couple of years playing out from with regards to like these aspects of digital currencies coming into the play a little bit more as well? How do you see the next wave of users getting onboarded into this? Like, how do we make this easier for the average person, the no coiner, to join into these markets?
Got it. In the Web3 finance realm.
Yeah.
I think the important part here is, so there's a lot of Web3 finance tools out there. I think it's going to be very healthy for the ecosystem for there to be interoperability between Web3 finance apps like Cryptoworth to Rise, for example, because no single startup can solve these major challenges alone. So it's very important for the ecosystem to have cross interoperability, connecting data, facilitating data for people who are not super Web3 savvy, coming in from Web2, simplifying the on-ramp, off-ramp process from payroll solutions like Rise, for example, making it seamless, and then automating as much of the crypto accounting as possible through a solution like Cryptoworth. Because the reality is the Web2 financial tools are not going anywhere. Even in the Web3 revolution, people are still going to use QuickBooks Zero, NetSuite, all these major established financial ERPs and main ledgers. So if a company wants to work with a crypto payroll solution, a crypto accounting software, there's going to need to be connectability to Web2 apps.
So like Rise connecting to Cryptoworth, for example, to be able to integrate that data, and then also Cryptoworth being able to go to QuickBooks and things like that. We've touched a couple times already on cost basis. Can you talk a little bit more about the challenges that brings to play with regards to people accepting crypto assets on their own, and maybe the challenges involved with a subledger needing to be able to track that cost basis across different platforms?
Yeah, so cost basis becomes complicated in the world of crypto, because if you think about it, cost basis is usually easy to track, but with crypto, it's harder because in order to track cost basis in crypto, you have to be able to understand the different types of movements. And because there's such a variety of movements in crypto, whether it's bridging or batch transactions, which is very common now, to pay just one gas fee to send like to 20 different wallets, a certain amount of USDC or ETH, whatever it is. So having the capability of tracking the actual inventory movement is crucial for an accurate cost basis calculation. In the case of Cryptoworth, we automate that. So because we're able to track the inventory movement, whether it's a bridge or batch transaction, we're able to automate the cost basis calculation. And that's very important, the cost basis calculation to be available in different accounting methods like FIFO, LIFO, weighted average cost, HIFO, because Web3 is a very global industry. So with different jurisdictions coming up with their own ways of regulating how companies should be doing their financial reporting, some companies will have to be IFRS compliant, some will have to be US GAAP compliant. So the reporting requirements may vary based on the different jurisdictions. So solutions should be as jurisdiction friendly as possible.
Yeah. Awesome. Yeah, jurisdictionally agnostic is the key in this industry, I think, and being able to be agile. Jumping back to Hugo, can you discuss the complexities of tax compliance when paying employees or contractors in crypto?
Yeah, I mean, I think when companies pay their workers in stable coins, it's not necessarily complex because everything is denominated in USD, one-on-one for USD. So when you're filling out, your W-9, your W-2, W-8, then everything's pretty straightforward. And we made sure to build our platform in that sense. For now, every single payment is denominated in dollar, and we're sending all of our payouts in stable coins. So, it's easy for workers to declare their taxes, their income that way, and pay their taxes in USD. If they want to then convert to crypto, to different kinds of crypto that are not pegged to the dollar, That's on their own. Basically, they're reporting it as, essentially, capital gains or losses. But we made sure on the platform to keep it extremely simple, especially for traditional Web2 managers that came on the platform. And piggyback off of to your previous question around how do we get more mainstream users into the system, it's a lot about education and making those users understand that it's fairly straightforward and easy to do. So that's part of why we built our platform that way, paying in stablecoins denominated in USD.
Yeah. Those are like amazing insights. And I think that ultimately, like in a lot of other industries, the inputs that we put in determine the output that we get. And I know that, especially with something like a subledger and payroll solutions, having best practices in place so that we can set up our users to get the best out of our tools and the most out of our tools is really key. So can you guys speak to, maybe we'll start with Richard on this one, some of the steps that users can take with regards to wallet hygiene, whether that's segregating wallets for certain purposes or things like that users can take to get the most out of the tools that they have available to them?
Well, with wallet hygiene, the whole reason why wallet hygiene became such an early phenomenon in crypto accounting was because when companies were doing, and many companies are still doing it this way, when companies were doing their crypto accounting on spreadsheets, if it wasn't for wallet hygiene, it would be close to impossible to track and understand the movements and which assets belong to which wallet. So in the context of a crypto subledger, it shouldn't be as heavily required because, at least in the case of Cryptoworth, there's an endless amount of ways to segregate transaction data, classify it, label it, so that way if a wallet is used for multiple purposes, each purpose could be segregated, at least the activity can be segregated in crypto for financial reporting purposes. But what we see as a practice is that a lot of companies will have pretty, at least established Web3 companies will have pretty good wallet hygiene. For example, they'll have a specific wallet for like a payroll and a specific wallet for treasury, a specific wallet for certain expenses, contractor expenses. And nowadays we see more and more Gnosis contracts being used for like treasury and payroll and that sort of activity.
Mm-hmm. For more internal controls on who has access to sending out funds and leveraging multi-sig for those larger wallet balances as well.
Right, and we actually adapted for that. So when it became more and more common for companies to use contracts to hold treasury balances and do any kind of sensitive activity where the balances would be exposed to like employees or contractors, companies tend to be more wanting to use like a Gnosis contracts or contracts in general for holding balances that they don't have a choice but to expose, because you can see that you can just check the chain and see, oh, okay, this is the wallet that has this and so balance. So having multiple wallets requiring a signature to issue like some kind of payment tends to be more popular. Crypto subledger should be able to track contracts like a wallet if it needs to be, because it's more common these days, at least in the corporate Web3 world, these Gnosis contracts, right? So in the case of Cryptoworth, instead of connecting a regular wallet, you can connect a contract that's being used for treasury purpose or like payroll.
Nice. Kind of jumping back in, we talked a little bit about a hybrid payment infrastructure, and I'd love for Hugo to kind of elaborate on this. Could you explain the differences between a hybrid crypto and fiat payroll system over traditional fiat-only systems, or only compensating staff in crypto or the company's native token? So kind of those different aspects, whether it's token only or whatever.
Yeah. So, to us, the concept of hybrid payroll is, as straightforward as it gets. You're able to do payouts in fiat and in crypto, and you're able to receive payroll in fiat. And from a compliance standpoint, essentially, Rise, the way we operate is that we act as the middleman between the company, the payer, and then the worker, the payee. And basically, we say hybrid because we can accept all kinds of treasury, so fiat and crypto, and we can make payouts in whatever currency and at scale the workers want to get paid in. So us, the way we're built is that we, from a fiat standpoint, we have access to many different cross-border payment infrastructures that enable us to do payments in local currencies in real-time payments in about 100 countries today. And then on a crypto standpoint, our entire infrastructure is built on chain. So we're built on Arbitrum. We still have the capabilities to receive crypto on 5 different chains that are EVM compatible and issue out payments on those 5 same different chains. So you have Mainnet, Polygon, Avalanche, Optimism, and Arbitrum. And essentially, the core is on Arbitrum, but we can do those payouts on all these different rails. And just to go back to your previous question around wallet hygiene, we see that most of our big clients have wallets dedicated when they're funding their payroll on Rise. It's a wallet they only use for this purpose. And within our infrastructure, I think it's important to say that we put an emphasis on security and hierarchy. So a key component of our infrastructure at Rise is something called the Rise ID, which is a unique smart contract we deploy. We help our users mint when they onboard on the system. They fully own that smart contract with one of their wallets. And it goes for payers as well as payees. So on the payer side, let's say you have 3 different managers that are, on Rise, acting as managers, inviting team members, signing documents, processing payments. We want them to have a hierarchy on our system. So we built our system in a way that whenever you're interacting with our smart contract, you have to sign a transaction from a wallet that you've associated with your Rise ID. So essentially, in a practical way, it means that, let's say I have, all features available to me on Rise, but my finance manager, I only want him to be accepting payments, payments to employees or workers. His wallet's going to be associated with the Rise ID, and my wallet's going to be associated with the Rise ID. Tomorrow, if someone else comes on the system and I just want them to have view access, so not being able to interact with payments, I won't add their wallet to the Rise ID. So basically, with that kind of infrastructure, we're able to build hierarchy on chain, which I think is going to be critical, moving forward.
Mm-hmm. Yeah, and I think I'm sure this is part of the process. Maybe it's different terminology, but like whitelisted. Maybe this is what you're describing is like white labeled wallets that have been vetted and have been added to these different IDs that then are marked as valid wallets that are existing in the ecosystem.
Exactly.
A question: I'm not sure if you've noticed this phenomenon, but I've noticed that bank transfers from, like, for example, I will off-ramp USDC through Coinbase, and I've noticed that when USDC comes from Coinbase, or I convert it to USD on their platform and then send it to my bank, it seems that it hits my bank account a lot faster than just a bank-to-bank transfer. And I'm not sure if you've noticed that phenomenon as well. And I'm sure that that's a beneficial aspect of this all for a lot of people because they can receive those payments a little bit quicker.
Yeah.
I'm not sure if you've noticed that.
I think, it really depends, having been in the space now for a couple of years, you realize that there's many different types of fiat transfers you can do. There's many different providers on the marketplace. So it really depends what the underlying providers they're utilizing are. But it's true, in some instances for us, for example, when you cash out in USD and you're located in the US, the payments are, nearly instant, like real-time payments, basically. So it really depends what the underlying is.
Nice. And then in terms of hiring international contractors versus employees, what are some of the challenges related to that, and how do you overcome those?
Yeah.
Or even with like DAOs or people that have either pseudo-anonymity or respect their privacy.
Yeah.
How does that function within the payroll system?
Yeah, and it's actually, and I think to date, we are the only payroll provider enabling DAOs and anonymous contributors to be fully operating on our system. Because, as a payroll company, we have to KYC, we have to verify identity, documents, address, also even process anti-money laundering checks on all the payees on the system. So for those payees that want to stay anonymous with their DAOs, we built in a specific feature so that they can, use their pseudo basically on the system while we still KYC them in the background. And I don't think that any other software out there is, provider is providing that. Now the challenge is, considering, independent workers versus W-2 or, full-time employees across the world, comes down to compliance, the different local HR, and, employment laws that exist out there. So independent contractors, it's much more straightforward because you're not responsible for healthcare or benefits or even declaring taxes. The workers are. But when it comes to full-time employees, that's when it gets, a little bit more challenging. And then if you add crypto, payments in crypto to the mix, like it gets even more challenging. So that's why, we're building what we're building. We're deploying entities all around the world that will employ those workers for our customers and deal with taxes, benefits, healthcare, and all the, HR laws that come with it. So, I think by combining both compliance and HR and those payments, fiat and crypto, we're going to make a pretty good dent in the market.
Yeah, I agree. And I think that a kind of follow-up question on this, on like regulation and evolving regulation, I'd love to get Richard's take on, where you see regulation going, whether it's from tax or just like a just general legislation. Maybe it's in the US, but maybe it's globally. How do you see that evolving around digital assets in the future and maybe impacting businesses?
Well, in terms of taxes, there's a lot of nuances that are different jurisdiction to jurisdiction. For example, in the US, if let's say you're paying contractors or doing payroll in stable coins. So although these stable coins are just backed by the US dollar, so theoretically speaking, they should just be 1-to-1. Sometimes they're not exactly, and they could be off by maybe half a cent or even more. Something we've seen, we definitely seen this in the US. Stable coins are still crypto assets that need to be, when disposed, need to have their capital gain loss calculated. So even though you're treating it as a stable coin, you still have to calculate short-term, long-term capital gain loss on those stable coins. So that definitely must complicate things a bit. I imagine, Hugo, I'm not sure how you guys approach that, but that's definitely very interesting.
Also, gas fees, if you're on Ethereum, those could be, when it's congested, it could be hundreds of dollars. And so, you can add those gas fees to your cost basis as well. And so that adds another aspect of it where, I used to treat stablecoin, in my early days as 1-to-1, but you really can't, because as you allude to, they can be slightly different. They could be just a little bit over or just a little bit under. But if you're talking, hundreds of thousands of dollars, it makes a difference, as do the gas fees. So really key there. And I would love to get, Hugo's perspective on that as well.
Yeah. I mean, and we've seen last year, especially those that developed in some of these stable coins, we make all of our payouts in USDC. We're, fairly bullish on this particular stablecoin for many different reasons. The fact that it's issued by Circle, very, company that's regulated in the US, so where we're based. So we use those tables to make all those payouts. As far as I'm concerned, all those, as we denominate all of when a manager comes on the platform, creates a pay schedule with a worker, is going to put the dollar amount. That's the dollar amount that we declare. And then the payee receives that payment on their Rise account, and from there, they choose whether to cash out in fiat or they choose to cash out in crypto or in stable coins. So the 1099s that we're going to provide and W-2s that we're going to provide are all, denominated in dollars. Things may evolve down the line, and depending on what country we're in, things will change. But so far for us, it's pretty much straightforward.
And I know you touched on this earlier, but I want to just clarify it for the audience. Can you talk about how, basically, let's say I'm a Web2 company and I don't want to touch crypto at all.
Yeah.
Can I still use Rise? And can you talk a little bit about how that looks?
Yeah, absolutely. And we made sure to, we've been in the space, me and my co-founder, Andrew, in the space for a long enough time to realize that you may have, best product, the most, technologically advanced product, you still need to build it in a way that anyone, whether they're crypto friendly or not, could use. So that's how, with that in mind, that's how we built Rise. So, traditional businesses with treasury and fiat can still use our system. It's pretty straightforward. We give them wiring instruction if they want to fund their payroll in fiat. There's a memo code in there. I mean, I believe I'm going to be showing the platform a little bit, so I'll be able to show you guys that. But they fund their account in fiat. we essentially top up their balance on Rise, they make their payments, and then on the other side, the payees can come in and choose the currencies that they want to get paid in. And again, from a compliance standpoint, us acting as the middleman enables us to provide that routing between the two. The managers don't even have to worry if their workers want to get paid in, USDC or Euro or any other kind of currencies. So, the only thing I would say that we also put in the background, going back to the Rise ID and that unique smart contract and associating wallets to the Rise ID to transact on the platform, we also built that with the knowledge that some people won't even have crypto wallets to add to their Rise ID. So we built another feature that we call the Rise security key, which is essentially a wallet that's encrypted on our user's browser, and it's gated by a password, 18-character long password. They can add that security key as the wallet that will own their Rise ID, if that makes sense. So someone that doesn't even have, a crypto wallet can still come in, sign up on Rise, create a Rise security key. They see it as a password, another layer of security, and that's how they interact with our smart contracts.
Mm-hmm. And so, talking about like going down the same road of a company that may, be they want to be able to offer it as a benefit, but they also don't want to deal with, or they're not ready to enter the world of digital assets. How does Cryptoworth work with companies that maybe have a hybrid payment structure within their own internal systems, right? Because there are a few companies that are 100%, crypto payments only and all that sort of thing. So Richard, can you talk a little bit about that and maybe what that looks like?
So for a company that has a hybrid setup, which is very common, like the majority of our clients, the companies we work with, have a hybrid setup, because the only companies that have only a crypto setup and are scaling that way are typically DAOs. But for companies that have incorporations in one or more jurisdictions, they typically have a fiat side of their operations. So if they're tracking their fiat transactions, they typically will do it in a fiat ledger, and then Cryptoworth would be the sub ledger in that case, rather than the main ledger. But we do offer the ability to enable companies using Cryptoworth as the main ledger if they want to connect fiat transactions into the system, and they can classify, label fiat transactions just like you would in a main traditional fiat ledger, create journal entries for them. We use Plaid. We connect with Plaid, so because of that, many banks are supported, mostly North American, I believe, Europe, some Asian banks as well. So if a company connects their bank accounts directly on Cryptoworth through Plaid, they can track all their fiat transactions, and that hybrid activity could actually still be in one place if they wanted to. But I would say the most common setup is main ledger, sub-ledger setup, main ledger being the traditional fiat softwares that you would typically see, like QuickBooks Zero and NetSuite, and connecting the bank accounts to those softwares because they're designed for those bank account transactions.
So we use the sub-ledgers as doing the legwork of the hard stuff for digital assets, which is tracking cost bases, compiling all the data in an effective way, and then we augment the existing kind of like legacy systems with this additional information. Very cool. So I'd love to pose these questions to each of you. Maybe we'll start with Hugo first, but I'm curious to get your guys' perspective on like, what are you guys looking at coming into this next potential bull run, right? We're coming up on the halving here in just under a month. What are some of the trends and things that you guys are following, whether it's related to payroll trends or just the overall crypto market that you guys are looking at? And then maybe Richard on your side, just like overall market trends that you guys are focused on.
Yeah, from a payroll standpoint, because that's what I'm doing is 1,000% all day, every day. We see a lot of our customers that started just working with independent contractors want to get into, want to have more and more full-time employees, and because they're growing and they want to essentially find a way to employ someone full-time and do all of their payroll and have all of the taxes, deductions, etc. managed for them. All of that while paying in crypto using their crypto treasury, and also offer benefits and healthcare to their workers. So definitely seeing more, like essentially my point is seeing those startups evolve into more mature businesses and not necessarily only wanting to work with, pseudo anonymous workers, but more, have a more, formal and traditional in a way relationship with the workers while still being fully on chain. That's definitely what we're seeing, what I'm super excited about.
Yeah, I think that, at least when I was in the industry, like compliance was definitely not for like front of mind for most companies, as was like, similarly with accounting, like when you're an agile startup, anyone that I was involved with, I made sure it was an important thing on their list. But in the earlier days of these markets, like people didn't take accounting seriously because they just either they didn't understand it or they didn't think it was important. And I think there's the same kind of thought about compliance. And as the industry and markets mature, I think that we're seeing a bigger focus on that because there needs to be, right? In order to be taken seriously, if you want to get listed on the top exchanges, they want to see that you're compliant. They want you to be able to prove that you're compliant. If you want to be here for the long run and you don't want to get shut down by the SEC, you really need to take those steps.
And sorry, just to add one more point, I think another trend that we're seeing and we're having our customers demand it more and more is cross-chain interoperability. So, hey, I have my treasury on, mainnet or on Arbitrum, let's say on an L2. How can I pay my workers, that want to get paid in, on Solana, basically. So, I feel like systems, subledgers included, and payroll systems included will want to be, as interoperable as possible and speak to as many blockchains as possible.
Nice. Richard, what are your thoughts on this?
I think this bull market is going to be very different than the last. The last bull market, the minute everything went down, we saw a lot of big companies, collapse that were blowing up previously in growth. I think this bull market is going to be very different. There's a lot more emphasis on compliance. There has been since actually the collapse of many companies we saw a couple of years prior. So because of that, we're seeing a lot more emphasis on getting financial reporting in place in many jurisdictions. And I think what is key here is tax advantageous jurisdictions are still requiring a certain level of reporting standards. And just because, so we're seeing companies that are based in, or at least incorporated in Cayman Islands, BVI, United Arab Emirates, right? Very popular, Singapore too, very popular crypto jurisdiction, crypto-friendly jurisdictions. That although it's not for tax purposes that they need a crypto subledger, but more about being compliant, having certain financial reporting standards in place. And we're seeing a lot more of these companies get audited. So audits are becoming more commonplace in crypto. We're seeing a lot more audit firms take on crypto. I mean, in the US, 2 years ago in the US, a lot of audit firms just dropped crypto completely, like Armanino, and there were quite a few. And now it's becoming much more commonplace. Deloitte is doing crypto audits in the US. So because of that, I think Web3 finance tools like Rise, Cryptoworth, it's a much better market for us, I think, now than I would say ever before, just because companies there's a good structure in place for companies to get the tools that they need to scale in the Web3 world.
Yeah, I think you're going to see a continued focus on this, and I think that we're moving in the right direction, right? We need regulation, we need clear guidance, and we need compliant companies to be taken seriously as an industry. And I think that a rising tide raises all boats. So when we all kind of get more compliant, we get more footing as an industry. We've been talking a lot about the products and kind of the solutions and the high level of what these look like. I would love to get into a little bit more of a demo on like how these tools look to the user and how they integrate together. So I'm wondering if you guys could maybe give us a little bit of a sneak peek into what these tools can do.
Yep. So I'm going to log in here as a manager. This is the platform that we provide to managers. You can see here on your dashboard your current balance, and I'll show you in a second how to fund your balance, action items that you may have around agreements or topping up your balance, approving a payment, all kinds of notifications, your active pay schedules, number of contractors that you're paying in a given month, and all your past transactions, which you can get receipts, invoices, and exports for, basically. So just for the sake of the demo and the topic of the day, I'll show you how to fund your account and I'll show you how to make payments. So funding your account, you get to this screen. As I said, like you can fund in different, you can use different rails. So you can use wire transfer where you add a bank account, or you can select dedicated deposit address, which is if you want to send funds on chain. So these are staging environments, but basically we have these 5 chains available. You would go ahead and select the chain that you want, and then we would add that for you. So going back to the front page, you can see here all of my options that I added. So I have my MetaMask on Arbitrum using USDC. I also have my MetaMask on the Ethereum chain on the testnet with USDC, or simply my, my bank account, basically. And it's pretty straightforward. We give you instructions. We create unique deposit addresses for our customers so that whenever we receive transactions, we realize that it's coming from this customer, and that allows us to automatically top up the balance of that customer, basically. So these are for the funding events. That's pretty straightforward. And then when you want to pay your team, so I'll show you a live example. I'll jump to our product production environment. You have your team page here with all of your different workers. You can see their statuses. You can see their RISE IDs, their emails, etc. You can also cover fees for them. But essentially, let's say you wanted to make a payment to this guy here. You would go out and click on the profile. You would click on add a pay schedule. We've built multiple types of pay schedules. So you have instant payments, scheduled payments, recurring based on multiple frequencies. You can automate all of those if you want. Milestone-based payment, hourly-based with timesheets, and then batch payments to multiple teams. But just for the sake of this demo, I'll show you an instant payment. You enter the amount. Essentially, you put the role, you put the description, which will go into the statement of work. You can enable the statement of work or not. You then go out and confirm. And tying back to what I was saying around the wallets associated to RISE IDs to make payments. So you click on confirm here. It's going to launch this little box here. I click on confirm, and then processing my MetaMask. I believe you guys can see this popping up, but my MetaMask opens up. It's asking me to sign a transaction. So this MetaMask is associated to my RISE ID. So it's essentially a second layer of security. And then boom, the payment goes out and it's taken from my balance and it goes straight to the paid. And then on the other side, obviously here you can go to your activity page and see all of your payments and export it that way. So yeah, that's pretty much as straightforward as it gets. You fund your account and then you make all those payments and see all of your activity page. I won't click on the activity page here just because there's data around some of our employees.
Awesome. And then Richard, do you have a moment to give us a quick tour of what it looks like on the Cryptoworth side?
Right. Can you guys see my screen?
Yeah.
Yes.
Perfect. So in the terms of crypto accounting, when you're issuing payments or you're funding, a funding wallet, for example, on a payroll solution like Rise, thankfully all of their activity is on chain. So all you really need to do is connect the wallet, or contracts that are associated with that activity. So wallet, you would just go here. If it's MetaMask, you connect the wallet, Ethereum wallet on MetaMask, or you can just connect the wallet as Ethereum. So pretty straightforward. Because it's on-chain activity, it should be no problem to just pull into the ledger that transaction activity. If it's a contract, then we do have the ability to connect contracts that are being used for transfers or treasury, for example. So when you connect your wallets, we pull all the from the chain into the ledger. So if we look into an example of, for example, a USDC payout, how one may go about that for crypto accounting. So for example, here we have a main treasury wallet, at least the wallet is called main treasury. And in this example, there's a send event that's going out as a payout. So USDC, for example, this could have been done through a solution like Rise, but in the context of Cryptoworth, we're just tracking that transaction activity for the purposes of crypto accounting and reporting. So you would want to classify that transaction as, let's say, a payroll USDC expense, or if it's a contractor expense. And just like that, this transaction line is classified. And if you want, you can even label it. The cost basis is tracked automatically. It's calculated automatically through the subledger. So through Cryptoworth, you can have a specific label. You can say, okay, well, this one, maybe we'll label it as Rise, coming from Rise. So there's many things you can do here. And then the funding wallet, I think I have an example. We can go to Rise transfer. So let's say you connect the wallet that is connected, or the funding wallet in Rise, then you can connect that wallet into Cryptoworth just to track that activity. And then that transaction activity will pull into Cryptoworth. So any kind of transfers that you're doing on Rise, because it's all on chain, you can track the full activity on Cryptoworth, classify these transactions, and then book the credits and debits based on how you have these classifications mapped. So here I have QuickBooks connected. That's why you see QuickBooks as the gateway here in the transactions page, the gateway column. And you can see which ones are synced, which ones are not synced. So that makes it pretty clear. And in your apps page, you can see you can connect to any kind of main ledger if you want. You can even use Cryptoworth as a main ledger to sync those journal entries too. So that it's pretty straightforward. All the activities on chain. Let's say you're adopting a solution like Rise, then you probably, from the crypto accounting standpoint, you probably want to have some accounts to reflect that activity, the payroll activity that you're doing on Rise. So you would want to have a payroll or contractor expense account. You would want to have like a funding account or classification. So here I have, for example, Rise transfer to just classify all those transactions that are being transferred to and from Rise. So you can really set up the chart of accounts to reflect any kind of Web3 finance solution that you use as part of your stack.
That's awesome. Well, thank you guys for the quick demos on both of those tools. I think that ultimately both of these tools require a little bit more of like a personalized touch when you start implementing these. So if anyone needs to contact or wants to contact or reach out to either of you guys, what's the best way for them to get in contact with you about your services? Hugo, let's start with you.
Yeah, I mean, we're present on all social platforms, but the most direct way would be to book a demo or just fill out a form that we have available on our website. So riseworks.io. And on link, you can get there through our LinkedIn page. But either fill out a form, book a demo, and then our team will be in touch right away.
Awesome. And Richard?
The easiest way would be to connect with our team on our website through booking a demo. We also have a inquiry form that you can send to ask us anything. We have in a chat support that you can actually go to our website and just ask us any question. Someone from our team will be able to answer you in real time. And then also, if you want to reach out to me directly, my Telegram handle is Pasquin.
Awesome. Well, thank you both so much for your time and your insights on this crucial aspect of the digital assets industry. I really appreciate it. And we'll talk again soon.
Thanks so much, Taylor.
Thank you so much.